Will the newly elected 47th President of the United States, Donald J. Trump, be good for the stock market? Stay tuned and find out. Today I have with me Grayson Shaw, a registered investment advisor representative of Christian Values Investing. And we're going to talk today about, will Donald Trump's presidency be good for the stock market? Grayson, let me ask you a few questions to start off here. You know, Donald Trump has said so much previously about tax cuts and deregulation. Can you tell us a little bit about what he's been talking about and if you think it will be good for the stock market?
As far as regulations go, Donald Trump rolled back 112 environmental regulations in his first term. And basically what that allowed for was these businesses were able to build things and expand their businesses a lot easier and a lot cheaper than they were before that. And as far as taxes go, if you give a company that's good at capital allocation more money, they'll be able to use that to grow and to pay their employees more and to share that with their shareholders as well.
You know, we always hear from him in his campaign, make America great again, put America first. You know, he said on that Joe Rogan program that back a little over 100 years ago in the late 1800s, that there was presidents that did a lot with tariffs that actually brought in the revenue. This was all before income tax came along, but brought in so much money into the government, they were actually able to pay down debt. Now, these two presidents were Benjamin Harris and William McKinley, and they started with real high tariffs and they were able to pay down debt. So he's kind of thinking that he can continue what he did with China, maybe expand it, and that we could actually bring in more money into the federal government and basically kind of help balance the budget and pay down some debt. What's your thoughts on that, and how will that affect the stock market?
I'm a little bit skeptical that we'll be able to use tariffs to help to balance the debt. And a lot of the economists that talk about tariffs in a negative way say that basically all they're going to do is spark counter tariffs against us. And so that'll also make things like imports more expensive. But the good thing about tariffs, and what I really believe he is going to try to do with them, is protect U.S. industry. He's trying to make the United States a place that you can come and build your factories and you can compete with a country like Cambodia or Taiwan. And so instead of going to Cambodia or Vietnam or a place like that to build your watches, you can come and do it in the United States. And instead of paying high taxes on your corporate dollars, it was 21% that he changed it to in 2018. And now he's talking about 15% as long as you create your products in the United States. That's going to be an incentive to come and do business here. And so it protects the industries in the United States. And what he's trying to do is make that a pitch to these companies to, hey, come to America, you'll be protected in your industry, and it'll be cheaper because you won't have to pay as much in tax. So he's trying to steal back some of those jobs that ran off to Mexico and other countries because of cheaper labor.
So really, the bottom line with that, then, it will be better for the U.S. companies and the United States economy. Even though there's some fear there may be some backlash to that, it brought in so much money with China, he's thinking it's going to do even greater going down the road with the United States with implementing more tariffs. So here's another thing that's been brought up a lot, and that's, about lower fuel cost, because he was really interested in getting America independent on oil and gas. And so what we noticed, if you go back to the time that he left office, we've seen so many posts on Facebook and other places comparing the prices of fuel then versus the way it is now. So how would that affect the stock market, you think?
I believe that it would be good because, again, it goes back to decreasing regulation if you're able to tap into more oil, that'll definitely help as far as clearing up money. People won't be spending as much at the gas pump. They also won't have to spend as much possibly on goods, because supply chain costs will go down, because the cost of fuel again won't be as high. That was a big part of why we saw inflation running as crazy as it was in 22 and 23. You had gas up at around $4 per gallon in a lot of places, and it's just hard to be able to sustain that. If gas goes up double, prices are obviously going to go up. And so what we might be able to see is some of these places come in and say, all right, we're going to start competing. Maybe we'll sell our burgers for 50 cents cheaper, and maybe some of this stuff will start getting back under control as far as the prices being real high, which would help us to have a little bit more money to invest and to be able to save as well.
Yeah, I think that will be great if we could get energy independent. That way we don't have to rely on foreign countries for all that type stuff. I think that is actually putting our country first. But one of the main things that's been a gripe, I think, over the last couple of years is that the Federal Reserve has went in and they have raised interest rates. It made housing really unaffordable for so many people, and we realize within the last month or two interest rates are on the way down. But Donald Trump in his first presidency, he's the only president I ever remember actually calling out the Federal Reserve chairman and saying, hey, I believe interest rates, you should be lowering interest rates. So he's really outspoken about lowering interest rates so that the companies out there can actually get where they're spending more money, where things are more affordable for American families. What do you think? How do you think that's going to relate to the stock market?
I think that Jerome Powell doesn't really like him because he's a challenge to his power and authority. But it is gonna help to be able to have lower interest rates. And as we saw in, I believe it was September, there was a half a point decrease, and earlier this month, right around the election day, there was a quarter point decrease. And looking forward to December, that same quarter point decrease is expected. So that would be a total interest percentage that would be decreased in the last 4 months of 2024. And this is going to help because debt is going to be cheaper. People will be able to afford more house with what their income is. And also companies will be able to borrow at a lower rate. So they will be able to grow, they'll be able to invest, and that'll ultimately help us in the stocks and investments and in your 401k.
So basically, in a nutshell, then, you're thinking that the stock market will do fairly well then over the next 4 years.
Absolutely.
Well, I'm in agreement with that. I think that Christian Values Investing is very bullish for the stock market for the next 4 years. Things look very promising. It looks like he's getting a good group of people together to help run the country. So everything right now looks positive. The outlook looks positive. We will have some headwinds here and there. We'll have a little volatility in the market. But the long-term horizon for the stock market for the United States economy is very bullish. Until next time, God bless you.
Let us know in the comments what you think is going to happen over the next 4 years. We would love to hear from you.